Hello and welcome to another week of Finance Talk with myself, Sophia. Each week we bring you a video to go alongside our blogs that we share each Monday with yourselves. And in this week's blog video, we're talking about why should you use leverage in your property to increase your profits. We discuss leverage and what and how it is used in the property environment, using it in your business and ventures, and also why it is a good option for you as a property investor. As we are focused on helping women build their wealth, we want to dispel some myths, including all debt being bad debt. So in this week, there are times when we're going to be talking about on finance and may be suitable choice for you, allowing you to get more for your money. Learn more about it by viewing this short video. Every Saturday, we bring you this video so you can be engaged with us. So don't forget to comment below, ask your questions, or even reach out for a free discovery call with myself, Sophia. Love to hear from you. So what is leverage? Using debt to increase the potential return on your investment. Leverage in property is generated by using borrowed money from a loan, that's the lender, or your partner in your business as a source of funding. A simple example of leveraging is a mortgage. If you put down a 20% deposit, this leaves the remaining 80% to be leveraged. Nowadays, it's typically 25% on an investment property that you put down, but many lenders are coming to the market now offering an 80% loan to value for buy-to-let investments. In doing this, it allows you to buy larger price homes and will hopefully bring in a better return rate for your investment. This should help you make more money off of other people's money and should secure your future on your investment. So how can you use leverage in your business? One way to gain leverage on an investment home is to buy a lower price home, all in cash, and then purchase another home with cash, use a loan to pay for the rest. You can build equity, that way the future for yourself and your family will be secured. So typically, I would buy a home for 75% loan to value from a lender, and I will put 25% down as a deposit against other costs as well. So don't forget your solicitors, your stamp duty, and all associated costs. And then I leverage the lender's money to make buy more properties and invest in and as I go along. So that's how you leverage the bank's money. So equity, the difference between what you owe mortgage and what your home is currently worth. If you owe 250,000 on your mortgage and your home is worth 300,000, you have 50,000 of equity in your home. If you keep on doing this type of investment, it should bring out more of a financial return on your investment. This method is stated to be risky, but it is worth it if it helps you to be more financially stable and provide a really great source of income for yourself and family. The more leverage, the greater returns can be, but the losses can be larger as well. Leveraging your investment essentially makes the return more volatile. And if you can't stomach the risk, don't bother at all, said Blue Leaf. Try using someone else's ideas on leverage to see if it is a good fit for you and different ways of you making money for yourself. We have talked about the risk, but comparatively, this method is less risk averse than the stock market, for instance. Know the rules. Remember, when using leverage, just remember that the only purchase homes that you can afford the payments on, i.e. investments that you're going to get the rental income on. And do not let any payment go by without getting paid from your renters. that can negatively affect how the leverage works. An idea to keep in mind is to try and find a balance between what your down payment is and your monthly outgoings are. Also take it step by step. You do not want to rush anything, especially if it means that you'll lose money in the end. You need to keep your investments higher than your losses. It is important that you do this and ensure that it's a successful venture. So make sure that whatever you're borrowing, your rents can cover it over and above, because you've got management fees to cover as well. So even though you're leveraging somebody else's money, make sure that you've done your due diligence and your sums to make sure that it stacks up well. Keep the focus mainly on the cash flow. Keep your records for your rental property management to ensure that you are keeping notes on your cost. It is worth to keep both of them. If you can keep your expenses lower and able to make a profit, then leverage is a good expenditure for you to try out. Helpful facts and tips. Do not always count on the equity that your house may bring in. Some homes' values do not accrue out as much value as others, and that can be detrimental to employing leverage. Always keep in mind that location is key. I mean, this is fundamental when you're viewing properties. Make sure that the location is key for the type of investment that you're going in. When you're finding your investment home to purchase, a good home in a good location will help you with the sale of your home if it comes to that. So remember, you can reach us out via email for our free discovery call. And if you need any more information on how to invest in property, how to get started, what tools you need, what things you need to get you on your way, and if you're a seasoned property investor, how can you expand that portfolio? Please feel free to reach out to us at info@savvywomen.co.uk or visit our website and book an appointment. That's www.savvywomen.co.uk. You can also reach out to us, which I hope you do, on Twitter, Facebook, Instagram, YouTube, and LinkedIn at 50 Savvy Women. I look forward to hearing from you and can't wait to share more insights from our finance talk and our blogs next week. Speak to you soon.